All right, so welcome back. My name is Randell Tiongson, and we're here for another video. And really excited to talk to you about these things, some development in the investment side, making things very easy. So with me here is somebody I've been chatting with offline. Okay, his name's Ante. Ivan, can you kindly introduce yourself?
Hi, so I'm Ante, like what Randall mentioned. I'm a multi-asset portfolio manager for ATRAM Trust Corporation. I've been in the investment management space for about 9 years already. I've been around equities, fixed income, and then I've been an analyst, I've been a trader, a portfolio manager for equities, and now I'm a multi-asset portfolio manager. So we all look globally and locally, both asset classes, even commodities. So
I'm
it's
excited
been
about what
a
we're gonna talk to you about, Ivan.
sure, yeah.
We are talking about your smart equity index.
Index fund.
All
Yeah.
right, smart equity index, and although I've interviewed Ivan offline, so you said smart equity index. What is a smart? What makes it smart? You know, it's an index fund, but what makes it smart?
Yes.
By the way, siguro maybe in the
Mhm.
interest of other people, maybe you can talk about what an index fund is to start with.
Sure. So yeah, that's a mouthful, right? A smart index fund. What does that mean? So let me start with an index.
Does that
So
make you
an
a
index is
smart
really
manager? No. All right.
hopefully, and I can show you later about the performance. But an index basically is a for example, the PSEI, the Philippine Stock Exchange Index. It's a representation of all the companies in the country, right? In the PSEI, it's the biggest companies in the Philippines. So that's an index. And usually people invest in tracker funds, which tracks that index. So an index, you don't need an active selection. You just copy the index. The PSEI decides what are the components are, what are the companies that are in the index, and what are the weights of those companies are. If you're an investor for an index tracker fund, then you just copy that. So this one is a smart index, right?
Okay.
So it has
By
the
the way, just to
benefits
add,
of the
can
index.
I add, no?
Yeah.
In the index
Mm-hmm.
fund or the PCOM, the PSEI, we used to call it physics. Anyway, so way back.
Oh yeah.
So, di mo na inubutan yun. The PSEI pretty much has the largest companies, largest capital,
Mm-hmm.
market, according to market capitalization.
Mm-hmm.
So, and then they move. So they do change. From time to time, they will add or they will remove. So if your market has, gone down and everything, yeah, there's a chance, especially when nasa bottom ka, no? You might be taken
Mm-hmm.
out and they might bring it back in. But generally, especially on the maybe the top 15, 20, these are what you
Mm-hmm.
call the blue chip stocks. Okay, they are
Yes.
performing
Yeah.
well. And that's the reason why their capitalization is big. And that's the reason why they are in the index. So, if you're a tamad investor like me, I don't want to think about it. I'd go in
Mm-hmm.
the index because I'm sure, that all the big companies are there. There's a reason why they're there. And you've seen that, historically, they've done pretty well. But
Yeah.
here you are, you're saying there's a
Mm-hmm.
better way to do I mean, yes, let's do index, but there's a smarter way to do index. So, can you talk
Yes.
about a little bit about the smart index?
So let me share a screen
Okay, go.
presentation so that it can be easier, I think, for the audience to digest what you're talking about. So like what you mentioned, this is a smart index. So why is it smart, right? Just from that name, it's a combination of the index, all the benefits of that, and a combination of active managers. In ATRAM, we are active managers, meaning that we believe that we can beat the index, that there is this opportunity for us to select stocks, to change the components of the index so that we can perform better, right? And that's really the main focus of investment management for us
You're talking
is
about
to
you're talking about other products like the alpha opportunity and all these things.
alpha off, yeah,
They're really
off.
they're designed to really outperform, not just
Mhm.
they're way outperform these funds. That may or may not happen, at a certain time, right?
Yes.
So those things. Okay.
So this one is a combination of that. It's a combination of an index fund and an active fund. So why do we want to do that? Is because we want to focus on the large cap
Okay.
blue chips index because we think that there is value to be
Those
made
in
there.
the index.
Those in the
Those
index.
who made it to the
So
index. Okay.
those who made it already in the index. But at the same time, even though it made it in the index, there will also be companies, diba, that can outperform and underperform relative to each other. So let's say um, in this pandemic last year, the telco companies outperformed the property companies, right? Well, when the pandemic hit, because there were utilities. So how do you figure out which one will outperform? And this is really what makes it smart is. So we have a quantitative and rules-based approach. What does that mean, right? What's a quantitative and rules-based approach that makes this fund smarter and that it can beat the index? So what we use is really four factors. Um, First one is earnings and sentiment. So really, what's the earnings growth, right? And that's if the higher growth that you have, we think that it's going to be more valuable, and then you will outperform the rest of the names. And then the second one, and it's not really looked upon by other investors, is that the change in analyst recommendations. Like for example, Randall, you mentioned, diba, parang if you're kind of lazy, just want to do your job, and you want to make your money work for you just invest in the index.
Yeah.
But there are people who look at each of those companies and look at the intrinsic value. What's the value of that company? So those are the analysts, right? There's a lot of them. And institutional investors like ATRAM, we also look at their reports. So it has informational advantage. So if they change their call, like for example, oh, I'm more bullish now, I'm more positive on property or in cars or in malls, then they will change their earnings forecast. When they change that, and it takes a while for the market to digest the news, then there's an opportunity there to invest first, right? So that's what we look at. That's one. Quality is the second one. So are you making money over your cost? Do you have a sustainable business model? For example, like what you mentioned already, if you do not have a sustainable business model, over time, you will be beat by other companies. So
or
you're not going to be as big.
Yeah.
You're going to be taken out of the index. Or even you're going to go somewhere and go bankrupt. So what we have to look for is quality companies, right? So the more quality company that you are, the higher your growth is, the higher your earnings are over your cost of capital, the better it is.
So Evan, just interject a little bit, no?
Sure.
So it can be that your quality and yet maybe your price is not yet reflected of that. Because in the index, you need to understand that your ranking is based on your capital, market capitalization.
Market capital.
So that's the cost of your stock multiplied by the number of shares. So basically, so how you do it that way. So pwede, and this is possible, pwede quality ka na, and yet the market hasn't bought into that yet. So you can be in the index, you might be high quality, but maybe you don't even belong to the top 10 yet or the top 15 yet. So in terms of your share, because of your market capitalization is very small, mababa ka. And you're saying is that upon our analysis, this guy is not going to be there for, after a while, when the market reads this and sees this, they were going to go up because of their fundamental strength. Or maybe, teka, this industry is growing. Wow, these guys are making money. I mean, new regulations are they're profiting from this new regulation and you see that. So uunahan mo na before they make those market changes, because they do. Guys, very passive ang index. When market capitalization moves, they do move also. So before they do that happen, you go there. So instead of, let's just put amount, instead of just 3% of the index, maybe you can overweight it a little bit to 5% and thereby making that's how it is smart. All right. Okay.
Yes.
Am I getting it right, Ivan?
Yeah. Okay. You got it exactly right. So it's just basically owning more of what you want based on these factors, right?
Okay.
So it's owning more of what we think owning more companies that will outperform the rest.
Or on the flip
these
side,
are the factors.
On the flip side, you might think some funds, some companies in the index might be overvalued already. So you would underweight naman. Let's say, teka, I mean, they benefited from like a spike in, I don't know, hindi naman siguro high.
Commodity prices, for
Yeah, whatever,
example.
they went up
Yeah.
crazy. That's why their share became much higher in the index.
Mhm.
But you might say, that, well, this is not going to last. It's
Mhm.
going to correct, and stuff like that. Before it corrects, we're going to correct it ahead. So if
Mhm.
assuming it's 7% of 5% of the index, maybe in our assessment, you should only be 2% or 3%. Now I can do that.
Yeah.
Overweight,
So
underweight. All right.
overweight, underweight, own more of what we think will
Or own less.
appreciate more,
Yeah.
or own less of what we think are super cheap, super expensive
Yeah,
already.
yeah. So parang ganun. If it's cheap, I'll buy more. If it's expensive, maybe I don't want to have more of it.
Yeah. Mm-hmm.
Kasi the index
And then
doesn't tell you that, no? But
no, it doesn't.
just
It's
copy
just the
what you do.
size.
Yeah. Okay.
Yeah. So it's this is smart, right? And the index is just wala. It's just you're just copying everything without thinking about it. But as the main point here is, as we know, you can beat the index. It's just hard. So you have to have a methodology to do
To
so
do it. Okay.
consistently, right? And this is one of those things. And the last one is momentum. I know everyone here or everyone that's listening know about, if for example, this stock, this property stock, for example, it goes up last year. Usually it will go up pa next year, right? Or for example naman, the momentum naman is, if it went super down this month, usually it goes back to where it went before. So it's a combination of that. It's either
Okay.
who's the biggest performer last year
Okay.
or last 6 months. Probably and usually it performs again in the next six
Okay.
months.
Okay.
So that's momentum, right? And what's good about this system is that it doesn't only look at one factor. Like what I mentioned, these are 4-factor families.
Yeah, because
Like
if you only look at
Mhm.
Ivan, if you only look at one factor, you might give into certain biases also. No,
Yes,
you might
yeah.
be overwhelmed. Kato yan, ito yan.
Mhm.
And then wait, there are other factors that I have to see first.
Mhm.
And there's a problem of individual investors. So you can get carried
Mhm.
away just because they're earning well and this is gonna be, and then you're not seeing the other factors. Yeah, they might be earning well, but maybe they're not gonna be trending,
Yeah.
again anymore, or
Mhm.
maybe they're very expensive already. They
Mhm.
maybe already been priced in and stuff like that.
Mhm.
You might have certain biases. So, and that's
Mhm.
the beauty, because you the many factors that you need to consider. That makes it smart. All right, get it. Okay, I got it.
And then what it makes it smarter is that we all know that information is gold in the stock market,
Mm-hmm.
right? That's your commodity. If you have more information, the quicker you have it, the better for you because you can move faster. And here we have weekly updates of these information. If there are any changes, we capture it fast. So if we think there's a big change, like this company that we like, biglang it worsened the fundamental. Parang the earnings went down because of a war, or for example, ASF or African swine flu. It's affected pala. And it's not yet known by everyone, but we can capture it na kagad in the data.
Yeah,
Then we can kagad change our
you
portfolio.
move ahead
So it's
because
fast to move
your
ahead.
research team needs to, I guess masipag yung research team yon.
Yeah.
And
It's a
you
research
need to
team and
talk
it's
to this.
quantitative. Yeah.
Yeah, you need to talk to them all the time. Even the local companies, I know for a fact that you guys talk to them on a regular basis.
Mm-hmm.
Yeah. Okay.
Yeah. So just to summarize, Randall, it's both that we use these factors interchangeably and together to make it more robust. Na parang it's not gonna be biased lang, and we update our information quickly,
Okay.
and then we change our portfolio if there's any changes.
Okay.
So
I
I
just want
guess
to emphasize this, Ivan, for those listening.
hmm?
No, these are all within the framework of still the index, because fund
Yes.
managers can get out of the index basically. So if I am managing a particular fund, say ABC fund, it can
Mhm.
be very actively managed, but I can also buy outside of the index. I mean, I can buy an IPO, or I can buy a second
Mhm.
liner, or or basura stock or whatever. I
Mhm.
can put that in my fund. But in
Yes.
this smart index fund, you are I guess the beauty is you are now just limited within the index. I can
Mhm.
play with the weights, the overweight, and buy more or buy less,
Mhm.
basta it belongs in the index. So in a
Mhm.
way, you are protected by,
Mhm.
you're only buying large capital stocks.
Yeah.
So you're not going to be buying this, high growth but high volatility stock. You're still going to be there. And the reason why it's
Mhm.
smart, I can play within the index. So
Mhm.
it's like an index, but it's not. Di ba?
Yeah.
It's
Mhm.
like an actively managed, but it's still an index. So
Mhm.
now I get it. Now you're very smart to call it a smart index fund.
Yeah. And I guess let me share
Go.
the really the main after all of these presentations and factors, what makes it smart really is the historical performance,
Yeah.
right? Like for example, if I use this but it doesn't work in the
Yeah.
market when you execute it, then it's not really smart, right? Your
Nobody's
investors
gonna
can
invest there.
yeah. So I think I can share with you
Okay, go.
are the performance of last year when everything's volatile, right? Everyone had a hard time. So because of this process, um, what we did is really
Okay.
so this is the performance last year. Obviously, the index was down and the Philippine equities market is down, and therefore the fund is down. But as you can see here, we outperformed the PSEI by 2.58% last year. The fund is the white line, and then the PSEI is the yellow line. As you can see here, I think most especially the most important part is really if you look at March when the market dropped so much, we outperformed na kagad the index. So we protected capital kagad because we saw already that there's something wrong
Yeah.
um, with these companies. So what we did is we reduced most of our exposures to those cyclically oriented companies that will get hit, di ba? Like lockdown, hit kagad, there's no activity. And we shifted to the more defensive companies like utilities, telcos, and that really helped us a lot last year.
That's why when they
Uh,
recovered, you recovered ahead.
yes,
Yeah,
because
okay.
we protected the capital because it's very important, right? To protect your capital
Yeah.
first. That's the first rule of investing: never lose money or protect your capital first. And this is actually the best. I think you mentioned that we are in the index, so it's the largest companies, and also obviously the most secure in terms of funding. They have diversified business revenues, so
Yeah.
they're not gonna go
Yeah.
bankrupt
And they're
easily like the
liquid.
other
People are
second
buying
largest.
their
They're
stocks.
liquid.
Yeah, you
Yeah,
might you might get stuck with a stock that nobody wants to buy. And that's the
yeah,
reality, right? So if it's one of
yeah,
those stocks that you can't even sell, even if you want to sell it, so that's a
yeah.
problem. At least you're not guaranteed, but the probability that people will buy, there's also going to be people buying it on that at least
Yes.
those in the index. Okay. But also
So
downside is, yeah,
mhm.
you can outperform, but hindi naman pwedeng sobrang layo because you're just still
No, yeah,
in the index. And one of
yes.
the reasons why some funds outperform, kasi sometimes they move it to cash, di ba?
Mhm.
You can't do that because it's in an index pa din, di ba? I mean, to a certain
So
degree lang.
there, I think there's an option for us to increase our cash a bit, but for
Not,
sure not like 10%, not 15%. We have a little bit of leeway to increase cash, for example, because of redemption, subscription, and also because of if we think really that it's gonna go down, it's also in our methodology na parang, like for example, right, the index trackers, what they do is they're fully invested. But here, this is also why it's smart, right? If, for example, the active managers say, the market's gonna go down, and we don't do anything about it, then we're not that smart,
yeah, okay.
right? So it's smart in many ways. It's also smart in protecting your capital. But at the same time, it's an index fund, so we can't really go 10%
There's a
cash.
limitation
It's a
also.
limit.
Yeah,
It's
yeah,
a limit because you can't be wrong, right?
yeah.
Um, so it's both. It's an active and a passive index strategy with
Okay.
limitations. So you know what you're buying
All
as
right.
an
All right.
investor. You know.
Right.
Um,
So my question, who should be investing in a fund like this? So that's a question.
oh,
Who do you
yeah.
think should be investing in a fund like this?
So based from historical investors in their fund, I can show you.
Okay.
Sorry, that's so we have new to investing. Everyone can be investors in
And
this
we have good
fund.
news later on. I'll tell you why.
Yeah. Thank you. So everyone who are new to investing and who wants to participate in the stock market, because we all know, despite the PSEI not really performing so much last year, we think that there will be a recovery in the long term.
Okay.
And if you have extra savings and you want to deploy that, diba? You want to participate in the Philippine recovery, then you want to invest in the largest and the blue chips.
Yeah.
So you can
It's an
invest here.
opportunity for you to buy these stocks cheap because
Mm-hmm.
if you wanted to buy them a year, 2 years ago, they can be a little bit more expensive. But
Mm-hmm.
now you can actually get them in a good, well, it's not as cheap as it was maybe last year, but then
Mm-hmm.
again, it's good value. So you might
Mm-hmm.
want to consider investing, especially have a long-term view. I want to emphasize, no, Ivan, para alam natin, people who want to invest in anything with an equity laced type, whether you're buying individual stocks or buying funds, whether in a UITF mutual fund or even in a VUL, you have to understand that these are long-term investment uh, securities. These are long-term investment instruments. They are
Mm-hmm.
really not designed. Of course, you can make money in a year, 2 years, but it is always better to have time as a horizon. So if you
Mm-hmm.
have, if you want to invest in the long term, uh, you want to prepare for your retirement or even getting married, maybe 22, 23, you want to get married at 30, then maybe you have six,
Yeah.
7 years to prepare for your wedding. By
Mm-hmm.
that time, open na lahat, mahal na, mura yung magpakasal ngayon, by that time, hindi na mura. So, you want to
Yeah.
invest, you might want to get married now. Anyway, so you want to do that, then that's something that you can consider also, right? Sige.
Mm-hmm. I think that's quite correct na parang it has to be long term. Kasi all of these, it's volatile, right? If
Mm-hmm.
you're gonna invest your money that you need next month, you don't know if it's gonna be up or
Yeah.
down.
So don't
No
invest
one,
your emergency fund. Please lang.
no,
No, no, no, no, no. Okay,
yeah,
not even invested. I mean, maybe you can consider money market. That's it. Okay.
yeah, you can earn like 0.1%,
Oh,
but
no.
it's safe. Yeah,
Okay. 1 point
come
something.
on, 1 point something.
Okay.
Okay, and then not only for new to investing, right? For example, you're a stock picker. You have your online brokerage account, right? You're picking your second liners, third liners, the high growth stocks. But at the same time, you're not sure if you're gonna be correct in your timing because it's very hard to pick stocks, right? You need a lot of information. But at the same time,
It can
if
easily
you
be
think
hyped. It can easily be hyped.
definitely, diba? We all know that it
Don't
can go
get
up
your
50%.
information from Facebook. Okay. Sige.
Yes. So if you want to play in the market, definitely go ahead. But obviously, the caveat is you have to research and
Okay.
you have to know what you're buying. At the same time, if you're doing that and you're bullish the stock market and you want to kind of hedge a bit, na parang oh baka I might not do well on my own,
Mm-hmm.
you want to invest in an index fund that can do well because we have professionals working for you.
Okay.
All right, so you can do your own and hire somebody to manage your capital for you also. So, for example, if you don't do well and the index does well, then you at least are hedged.
Yeah.
So, in one part of your portfolio, you earn.
Okay. Very good.
So, and then the last one is the institutional investors. Like, for example, you have pension funds, you have wealth clients, those that have 50 million, 100 million. They invest in this fund also. Why? It's because they want an exposure to large cap companies, right? For example, in this one, we've already mentioned that's an index, so large cap. You want an exposure because you think it's going to go up. Um, uh, and then you can also use other funds as your small cap exposure, like for example, Alpha Opportunity. So you can combine both
Okay.
funds if you're a big fund because you don't have the capacity or the expertise to pick your own stocks. So what you want to do is you allocate na lang. I want small cap, I want large cap. So you pick the funds, right? That can give you that exposure. And this fund can give you large cap exposure,
Fair enough.
can give you market returns and outperform pa.
Okay.
Mm-hmm.
Good. So I guess just to add no a little bit.
Yeah.
So a lot of people, and you hear this, you hear investment experts, influencers, everybody says, don't, it's good to buy index, blah, 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 blah.
Mhm.
You've been hearing that. I won't name it,
Yeah.
but say, if you want to get exposure, just stick to the index. And everybody says that. And to agree,
Mhm.
to a certain degree, I agree.
Mhm.
Personally, I don't put all my money on an index because I
Mhm.
still want some growth. But
Yeah.
also, if you want exposure to index, but you want it, to perform, may konting, and not much. And you're saying the limitation also, you just limited. I'm sure naman you're not gonna overweight by 4 or 5 times more than the index, right? So
No.
may konting and you still want to do that, and you still want to be protected by the limitations of the index, then this is perfect for you,
Mhm.
right? So I want a little bit movement. I don't want a very static type of a index na, gagalaw lang yan because maybe huli yung index kung gumalaw and
Mhm.
stuff like that. But, long term, I know it's good. I want to do that. And you've proven in the last 4 years or so, you are slightly better, not way better, but better.
Mhm.
And,
Mhm.
so that's perfect for you. If maybe I don't want a fund that masyadong malayo dun sa index or wala
Mhm.
sa index or wild masyado yung allocations, okay?
Yeah.
Like some of the funds that you carry, right?
Mhm.
Of course, may binabagayan niyang investors like me.
Mhm.
I like some of your funds also,
Mhm.
just to be transparent. Pero
Yeah.
if you're, then this is an idea for you, all right?
Mhm.
uh, Charges. This basically, since it's an index, it will carry
Mhm.
a smaller charge than, let's say, a very actively managed fund.
Yes.
That's your advantage
Yes.
also. Okay.
Yeah. So we're cheaper also, but we
Okay.
outperform them.
So
Just
so
not
it's
all,
still
not
the
all,
same cost like a
but
tracker, same or a little bit more expensive than a tracker.
um,
Does this work?
it's
Because
a little bit more expensive. So it's in between. So
yeah,
a
okay.
tracker is this, are active. We're in between also in terms of cost.
All right.
So
Okay.
that yeah.
So again, so
So
there's
you
a
get what you pay
yeah.
for.
There's a disadvantage if you go on a very active because you have to pay more. But then
Mm-hmm.
again, they can really way outperform. Okay,
Mm-hmm.
that's in principle. So, but then you
Mm-hmm.
have to pay for it. So in terms of charges, you don't charge as much as a very active fund,
No.
but
Yeah.
slightly higher than a index fund na very passive.
Mm-hmm.
So that's good for you. So you're somewhere in the middle. All right.
Yes.
And okay, so for the interest of the others, the reason why I'm so excited, the reason why we're doing this video is because this will now be included in your GCash. You can go check your phone, okay?
Mm-hmm.
GCash your phone, go to your GInvest. It will give you the options. These are one of the options. One, two, five options. Okay. By the way, I'm not paid by ATRAM. I'm not paid by GCash to say this. I'm just excited because I want everybody to start investing. So this will be one of the five. I want to maybe I can do each and every one a video for each and every one of those funds. One of the five options that you have where you can use. And ako na magkasabi, Ivan, unahan na kita na. You can
Sure.
actually, believe it or not, which I think I'm surprised, really, delightedly surprised, that you can start this investment for as low as 50 pesos. I mean, where can you put 50 pesos where you can put it in the stock market? Diba? You can use it this.
Yeah.
And your GCash. Okay? Your GCash. So, you know, I'm really excited because I love GCash. It's easy to use. Why I also
Mm-hmm.
like ING, by the way. Just be clear. Okay, I like all
Mm-hmm.
of this technology uses, stuff like. But now I can actually do investments, and I can go with an index. All right.
Mm-hmm.
So for 50 pesos, I mean, you're crazy not to do that. And that's why I tell
Yeah.
people, test it out, try it, invest for the next 2 to 3 years. Let's see if it works for you. If it doesn't, then get out of it. But I
Mm-hmm.
believe the next 2 to 3 years, you'll see substantial growth in your investments. You want to add anything, Ivan? So GCash,
No.
50 pesos. I mean, you cannot go wrong. You are in an index, but not just an index, a smart index.
What index?
Right?
Yeah.
A smart index. So that's
That
the
outperforms the other index. Yeah.
okay.
So
That's
that's what you get.
okay. Okay. So that's very very important. Maybe you can turn off now your sharing if you're not going to share anymore.
Okay. Sure.
Okay. So okay, we can start this. It's
Mm-hmm.
going to be available. By the time you're watching this video, it means that it's now live. Okay?
Mhm.
You now try it out. I mean, 50 pesos, honestly, walang mangyayari sa 50 pesos even if it earns 20-30%. Okay? So what I recommend is you look at your budget, you look at your cash, you look at your salary, you look at your income, whatever. You allocate a certain amount of money for investing. Let's say, let's say assuming I earn 25,000 a month, and assuming I can save as much as 5,000 pesos a month, I only spend 20,000. So that 5,000, maybe I would put 3,000 on a savings. I just need the liquidity saving. But maybe I can put 1 or 2,000 on an investment like this. So maybe this
Mhm.
is another option. If you want to mix it, maybe you put 1,000 in bonds, a bond fund, and 1,000 in a smart index fund. Or maybe if
Mhm.
you're young, you're as young as Ivan, and I tell young people, go ahead and invest, because if you lose your money, Ivan, you still have
Yeah,
money, right? Okay, just
you
kidding.
earn it back.
Then earn it back. Okay, you can ask money from your parents pa. Okay, but if you can ask, we can. Okay, so you want to be able to do that. So that's a very good recommendation we have for you. And
Mhm.
there, I mean, it's an index, but it's not. Okay, it's
Mhm.
actively managed, but it's not. So what is it? It's a smart index. No? So Ivan,
Thank you, Randall.
invited to take a look at. I'm going to put the links also. So Ivan,
Mhm.
what do you want to add on? You want to close this?
No, yeah. So I'm very excited for you guys to try out this index fund if you want to participate in the Philippine stock market. Like what Randall mentioned, GCash, 50 pesos. Want to try it out, right? And it's a perfect way for you to peso cost average. For
Yeah,
example, if you're not yet sure, you just try first. And then if you get comfortable, especially because these are the blue chips, then you can add when it goes up, add when it's go down, because you can't really time it.
yeah.
And I think the combination of the access from GCash and this kind of fund gives you that beginner-friendly ability to start investing.
And it's easier. I mean, if
Yeah,
you open a mutual fund UITF account, it's so hassle. Okay, so now this is
definitely.
so very, very important. Suggestion ko for you guys, Ivan at ATRAM, and
Mm-hmm.
you can throw it to GCash. Have an auto debit facility for this, so that you can time it, because now you can do it for your GSave. You can
Mm-hmm.
allocate. So if you can do it, it's going to be easier. It removes this. Money is behavioral. It's not mechanical. All right. So
Yeah.
you understand that. So if I can have a recommendation for you guys, maybe you can talk to GCash, and you guys do it. Maybe have an auto debit facility for this. You can set it.
Mm-hmm.
So guys, I would recommend not do not invest just 50 pesos. I know it's the entry level, but that's your 50 pesos will not get anywhere. Okay? Even if it earns, look at it, if it earns 30% in 3 years, okay? In 3 years, your 50 pesos will be how much? 65 pesos, okay? Or 70 pesos when you put the compounding effect. It doesn't amount to anything. So maybe set aside. So maybe 5% of your disposable income, or maybe 10%, or maybe 20%, or maybe 5% of your total income, maybe 30% of the disposable income. You do the numbers, you do it, and if you can, if you take this recommendation, you're Ivan, wala kang choice because it's gonna be in YouTube now. Okay, so
Yeah.
auto debit facility is gonna
Mm-hmm.
really do wonders for all of you. So with
Yeah.
that, Ivan, can you ask them to subscribe to this channel naman?
Please subscribe to
Like,
Randall's channel. Like, subscribe. We're expecting you to do so. And if you invest already in GCash, please comment also that you
yeah,
invested.
so we will do that.
Yeah.
Yeah, so looking forward, and hopefully I get to invite the other guys to talk to you about. I'm really excited for all your funds, really. And as promised, no, I never put something I don't practice. So I will now invest in each and every one of those, maybe except the money market. But to magalit sa akin yung money market. I like the bond. I like the other four. I like this one, but I also like the other two that's coming out. And hopefully I'm gonna
Yeah.
be featuring it. So GCash ATRAM partnership. I mean, what else can you ask for? All right. My one,
All right.
subscribe
Thank you.
and
Bye bye. Subscribe and like and comment, please.
bye.
See you. Bye bye.